Welcome to the weekly wrap-up. I'm Elaine Stenson. I'm joined now by Rob Carnell, Chief International Economist at ING in London, for his take on the economic week. Tuesday was a significant day for Japan as a 3% rise in sales tax came into effect. Rob, how has the markets reacted so far, or is it too early to tell at this stage?
Well, the markets haven't really done an awful lot so far. Equities are very fractionally down, but that's just, could be no more than the usual sort of noise and volatility you get with these things. And the bond markets don't really seem to have responded much either. It is probably too soon to tell. What we really need to see now, after a number of months where it appears that Japanese households have been front-running some of their consumer spending to a certain extent, perhaps less than we might have expected. The question is now whether or not that completely falls off a cliff in the next couple of months, that they've front-loaded so much that they stop spending in the next couple of months. How long that lasts, how deep the fall is, and how quickly, if at all, things move back to normal.
The ECB has given the strongest signal yet that it's prepared to implement QE to prevent the Eurozone from sliding into deflation. However, Mario Draghi has kept interest rates at 0.25% for the fifth month in a row. Rob, do you think Mario Draghi has taken too long to respond to Europe's weak inflation levels?
I don't actually, and I think the obsession with weak inflation is perhaps overdone a little bit. The inflation numbers themselves aren't that alarming. There are countries within the Eurozone where inflation is on the verge of negative, but whether or not these countries have what you might describe as a worrisome deflation, a sort of Japanese-style problem, it's hard to make that comparison too easily. Asset prices are still largely holding up quite well, in particular financial asset prices. Housing markets in some places are beginning to, or have been declining for some time, but the rates of decline seem to be stalling a little bit. Maybe they're not going to fall for that much longer. And although wages are very low in most places across the Eurozone, they typically don't have a negative sign in front of them. So it's just difficult to say this is real deflation that needs to be addressed, rather than this is just the sort of necessary adjustment that these countries have had to undergo in order to regain their competitiveness and start operating as normal again.
And finally, Rob, some analysts are saying that the political crisis around Ukraine poses a danger to the broader world economy. Do you think that the situation in Ukraine could have broader economic implications?
Well, I hope not. I think the thing to say about the Ukraine, Russia, Crimea, EU-US standoff is that it has all the potential to turn into something very ugly indeed. Right now, as it is, with some sanctions being thrown around from both sides, it's possible that it could have some impact on the countries involved. Russia, certainly, the economic backdrop doesn't look particularly strong, and recent surveys suggest it might be weakening more. It's probably too early to attribute this to any of the sanctions that have been put in place, but they're unlikely to help. As for the Eurozone, it's got a pretty weak recovery, as we indicated earlier. It wouldn't take a lot to knock it off track. The US looks on a much firmer footing, but let's just suppose that the recent escalation in military presence on both sides leads to something more unpleasant, then that has every possibility of having a broader global impact on economic activity. So kind of fingers crossed that this can be de-escalated.
Okay, Rob, we'll leave it there for now. And that's your weekly wrap-up for this week. But do check back for more from the team on Monday. Have a great weekend. Bye for now.